All right, good afternoon. Welcome back here to Trader Minute. Great to have you. Great to have you aboard. My apologies for that. Still working on the voice a little bit. But anyway, let's get to it. No new challenge signals here today. We have upside crossovers for CMCSA, which is Comcast, but no signal there. And Procter and Gamble, which had a downside crossover yesterday, is having an upside crossover today. Neither are signals. Yeah, there are no downside crossovers out there in the market right now. And so that leaves the challenge with GLD, and gold. I guess it's up 37 cents today. It looks like a huge day compared to what it's been, yeah, it has been incredibly flat, and still a nice looking chart overall. And we are on the auto exit date here for it. Now, the challenge with it ending tomorrow, with no new positions on the board, and what the real risk is out there for GLD. I'm holding my position. I'm going to hold it for the challenge. I'm going to invoke rule number 10. While all trades entries follow the algorithm, Jeff can step in under unusual circumstances and change the trade. This isn't highly unusual, but it is one of those situations where, look, I want some exposure into tomorrow, I'll hold gold and make that the last challenge trade and pull it off tomorrow and go from there. So the option price here on it. Let's get that filled in. We're down 27 bucks on the position, which is never fun when you have a stock that's gone your way. Let me get the price here, the ticker. There we go. 181 is the mark on that. Or sorry, 176. I looked at the wrong price. So 176. Right, so that's where it puts us. Really has nowhere. Right, it doesn't really do us much in either way. And so I am going to hold this here into the close, and we'll close it out tomorrow and go. Remember, challenge ends tomorrow. We'll be closed Monday, Tuesday. Then on Thursday, Friday next week, going to be doing some day trading trainings. And then on Monday, Tuesday, the following week, we'll do some live day trading sessions. And then the new challenge will kick off on the 2nd of January here with the new year. This morning I talked about this challenge and the trades this challenge. If you want to go check that out, I'll have more to say on the topic here as we go forward. All right. So that's challenge. Boeing. Was asked about Boeing. You've heard me talk about Boeing from time to time, and Boeing, interesting company, right? And it's a company that has been mired in these 737 issues. And they just don't seem to want to go away. And we do have some we have some issues there, right? There are just some issues when it comes to it. But I've mentioned that going into next year, Boeing's one of my favorite stocks, and it's a company that has some serious upside potential. But fundamentally, can we justify it? Fundamentally, what's the argument to going higher? Because all we hear out there is bad news. That's all we hear. But bad news is what creates pullback opportunities, right? You never see a stock go hit new highs on big bad news, right? It's one of those where the bad news gives some pullback opportunity, and that's what we're seeing with Boeing. So let's get out of the news. Let's get out of the what's going on in the regulatory issues and President Trump meeting with Boeing CEO. Let's get out of all that. Let's just go look at the raw numbers. Okay, and let's start with here on Y charts, and let's just take a look at the revenue here over the last 10 years. Okay, you can see how the revenue has been. And you can see that the revenue has pulled back sharply this year. Okay, it's one of the reasons the stock hasn't gone anywhere. Right, the revenues have come down by 15%. Okay, And that is something that, yeah, we tend to see a stock fall when the revenues fall. Makes a lot of sense. Very, very straightforward, very visual to see that. What about its valuations? Is it a cheap valuation? Well, it's a 50 PE ratio. That's not cheap, right? That's not cheap. That's some of the accounting things that are going on. More accurate number, price to sales, it's at 2.1. Well, that's not historically cheap for Boeing. So okay, and we don't really have a good valuation argument. What about price to book? Well, this just doesn't mean anything with the way they do their accounting. So, from a just pure valuation standpoint, there's not a whole lot to sink your teeth into and to say, hey, you know what, this thing is cheaply valued and all of that, right? Even from a dividend standpoint, right? It's not something we can argue is super cheap. And we don't get many opportunities where we could argue that Boeing is super cheap. And I don't think we're going to get one. We could, right? We could see Boeing go to 200 based with everything that's going on. And at that point, the valuations will start to look pretty good. But where it sits right now, this isn't a valuation argument. But when it comes to Boeing, the reason I like it going into next year is the same reason we've talked about with other stocks that I'm bullish on. It's this same element of Starbucks, and Starbucks going through this period of time where the comparables were just really tough. 2016, 2017, 2018, where, the company had been doing well. But you compare quarter over quarter, this quarter in 2017 to the same quarter in 2016, doesn't look like a lot of growth, even though the numbers are still growing. And then they went through a small contraction phase. And then what happened? All of a sudden the business ballooned? No. What happened is their comparables became easy. Instead of comparing against high double-digit same-store sales numbers, they were comparing against low single-digit same-store sales numbers. And so while the absolute growth wasn't more, the perceived growth was significantly greater. And when we look at Boeing, this is what we have going on. It's very easy to see here in Estimize, okay? And I've just come into Estimize. I've typed in Boeing. And here we are on an earnings per share standpoint. And if we look up here, we can see quarter over quarter, 24% earnings per share growth, 81%, 31%, 32%, 79%. The stock was soaring, right? Those are great numbers. But what are they? They're difficult comparables. But look at what's happened this year to the numbers. Gone from 452 down to what's expected next quarter at 193. That's negative 65% earnings growth. That's an ugly number. That's a real ugly number. Take a look at what happened this quarter, 311, right? And if we look at the quarter 2 quarters from now, it's to be 275, and that's negative 13% growth. That's pretty ugly. But these ugly numbers, what do? They set up easy comparables going forward. Take a look here at the 185. 185 here for the second quarter of this year. Well, if we go to the second quarter of next year, it's expected to be 275. Right? That's lower growth than 452, but it looks a lot better going from 185 to 275 than going from 452 down to 193. This is perceived growth, right? Significant growth. And sorry, I have my date wrong here. Let me get the correct one. So 185, right? Expected to be 448. That's 53% growth by the time we get to the second quarter of next year. Then you go from 204 up to 626. That's 332% growth. Those are monster Monster numbers. Those are numbers you typically do not see in a big Dow Industrial. Those are numbers you tend to see in a little technology startup. They're massive numbers. What about the revenue? Yeah, because earnings, is that just an accounting thing? Take a look at the revenue. Look at how the revenue was 9%, 11%, 7%, 3%, 12%, minus 2, minus 12, minus 21. Expected to be next quarter, minus 23. So we are in a revenue contraction here for Boeing. And we saw that on the Y charts chart for Boeing. But what has the revenue contraction done? It's created easier comparables. 19 billion revenue here in third quarter 2019 versus 31 billion in third quarter 2020. That's 59% growth. That's monster growth. Now, I'm not saying they're going to hit these numbers, right? But let's say they miss these numbers. Let's say they miss these numbers and they miss it pretty good. It may not be 59% growth. It may go to 20% growth. But you'll be able to look at Boeing and go, wait a minute, this is a company with 20% growth right now when the market itself is growing at 4%, 3%. The perceived valuations here on Boeing will shift. The comparables are getting very easy. And they're getting to a point where in second half of next year, they are going to look fantastic. It's going to be easy to beat the numbers. It's going to be easy to have double-digit revenue and double-digit earnings growth. Does it mean the stock is bottomed right now? No, it doesn't. Right? It doesn't mean the stock is bottomed. It could be, right? But we're hitting this low again off of a lower high. So, to see some sort of further breakdown would not be a huge surprise, right? I would not be surprised to see a snap lower, and then a snap back higher. But we have a company here that has been in a consolidation now for 2 years, right? For 2 years, who is going to go into next year with some of the easiest comparables in the market. To me, that's a recipe for something that can not only go higher, but can go sizably higher and trade like a tech stock. And to see Boeing stock price rally 50% off of these levels through next year, fundamentally, when you look at it from the comparable standpoint, that's not a big stretch. It's not outlandish to go, wow, that's crazy expectation. Something super has to go on. No, not at all. They're gonna get that. They're gonna get that easy comp scenario, and it's gonna look really good. It's gonna look really good. Now, things could fall apart. 737s could fall apart. Every company in the world could stop ordering airplanes from Boeing, and Boeing go bankrupt. We could see that, right? Realistic, likely. No. But possible? Sure, anything's always possible. But what's more possible? What's more plausible, right? And, this is just one of the reasons why going into next year, I'm very bullish on Boeing. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.